Welcome back to Main Street Informant. In this channel, we provide information related to wealth, money, power, finance, business, and economics. In today's video, we will talk about the wealthy man's predictions on the economic crisis the world is facing and the details on how things would look like when everything collapses. Charlie Munger has a net worth of about $2 billion and is the right-hand man of Warren Buffett in Berkshire Hathaway. In particular, when it comes to investing, the psychology of affluent people, reason, and life experience, he is a genuinely smart man who is unquestionably worth listening to. Munger issues a warning about the biggest inflationary bubble ever breaking and offers his predictions for how it will play out. According to Munger, we're on the verge of serious economic catastrophe, and the repercussions could be greater than what Paul Volcker experienced in the 1970s. Before we go into how it all going to play out, please help me out by clicking the like, subscribe, and hit the notification bell. Okay, so the Federal Reserve is beginning to wind down its multi-trillion-dollar asset purchase program, which has been in existence essentially non-stop since the financial crisis, which is the cause of the recent upheaval to rock the US financial markets. Many people have criticized the initiative, accusing the Fed of printing too much money too quickly and causing global financial markets to become unstable by maintaining ultra-low interest rates. In the past, severe inflation has occurred whenever officials have turned to money printing to try and ease financial problems. Prices start to climb sharply, and these are not merely temporary rises, as businesses have learned they can pass on increased expenses to customers who are more than willing to pay the additional cost. As a result, it is less probable that prices will eventually return to their previous levels. In the foreseeable future, interest rates are much more likely to rise than fall, which will intensify the gravitational pull on market prices. In fact, there is a strong likelihood that interest rates will be pushed noticeably higher if inflation heats up near its present 4-decade high levels. The potential to generate impressive real returns is becoming more difficult because multiple contraction is more likely than multiple expansion due to the likelihood of rising interest rates in response to rising inflation. The high inflation rate rises the bar for corporate growth and dividend payments to generate a real return net of inflation. Equity valuations are already at nosebleed levels, and the inflation rate is skyrocketing. The effects of increasing interest rates on the home market are already apparent. The 30-year mortgage rate has risen above 6%, and businesses in the real estate industry have started laying off employees in preparation for a decline in demand. As investors re-evaluate their development potential and other options, the value of private companies has also started to drop. What will transpire once the Fed starts to tighten can only be predicted with time. Over the last 10 years, there have been numerous additional similar warnings. Munger is so extensively read that his opinions on these subjects are usually noteworthy. The multi-billionaire investor reads and analyzes many subjects non-stop. Munger is familiar enough with the past to see how historical economic processes might be relevant to the present and future, much like the founder of Bridgwater, Ray Dalio, who has utilized history to create several models of how current-day economic problems may play out. Munger said that trouble is near. He thinks the stock market has frequently become a speculative gamble that is disconnected from actual stock values. Bubbles are produced as a result, and they will finally burst. Munger believes that a large group of people do not even know what they're buying, and all they do is cite quotes off the ticker. Generally, This does not help with the current situation like what we have seen in past recessions. According to his assessment, these are the possible things that could happen when the crash approaches. Money printing will cause serious danger. The inflation will give rise to dictators. And the negative effects of the easy monetary policy. Politicians and the Federal Reserve believe that the simplest way to solve immediate problems is to simply print more money. Obviously, there are long-term implications involved. We recall what happened in Germany in the past when Weimar Republic just kept printing until everything collapsed. It is a serious matter and very dangerous. Munger emphasizes that Japan may have survived thanks to its massive money printing. Munger emphasizes that Japan could have gotten by with its massive quantity of money printing, but he claims that they might only be the exception and not the rule going forward. Additionally, it should be mentioned that Adolf Hitler, one of the deadliest dictators in history, rose to power partly as a result of the Weimar inflation. He ultimately contributed to the Second World War, the worst global battle in human history. Munger anticipates witnessing something similar in the near future, that an inflation-driven dictator will make promises to protect the population and restore wealth, but this will ultimately result in a more terrible situation. Since government spending generates easy debt without significantly raising taxes, it benefits from easy monetary policy. Munger cautions that the loss of fiscal control by the government is the fundamental issue with easy monetary policy. This indicates that we are not just preparing for the economic collapse, but also dabbling in it. According to Munger, the value of the US dollar will probably zero out over the course of the next century. It's not quite as absurd as it seems. Since the Federal Reserve was established, the value of the US dollar has decreased by nearly 96%. Since the United States abandoned the gold standard in 1971, the value of the dollar has fallen by 86%. Based on historical tendencies of declining purchasing power, his predictions is almost certain to come true. His warnings frequently focus on inflation and the political instability it brings about. This ought to serve as a warning about the long-term risk that inflation poses. Do you think these predictions are likely to happen? Let me know in the comments. If you learned something valuable, please make sure to like, subscribe, and hit the notification bell for more contents like this. You can check out more videos on the channel and share. It will help my videos reach more people. See you in the next one.